Good morning, good afternoon, good evening, everyone, where you are in your part of the world. I hope you're having a wonderful day. I am Randy Roberts. We're going to be talking about um, the Pinnacle Methods workshop a little bit as a sponsor of this event. And when we get into what we're going to be talking about, we're going to be focusing on what things you can do to take all the information in that you're getting in the markets, or if you're new to the markets, what the important information might be, and applying that best we can to a financial solution that may fit you. Right. So if there's any questions, again, please put them in there, and we'll respond as best we can. There is support here to help me with anything that's just general Pinnacle Methods type questions. But I will get right to the presentation here. This slide will be coming back at the end of the presentation if you miss it. So what we're going to be talking about is patience in the market. Of course, it's misspelled, but the idea is you can do a good job of paying yourself by using your patience to pay off. And that's what we're going to be talking about here. That is the crux of Pinnacle Methods and supply and demand for any market and any condition. As we get into this, we do acknowledge that the information that is presented here is to be kept in the hands of Pinnacle Institute. It is our licensed materials. It is copyrighted, so please do not reproduce or republish any of the materials that you're seeing here. FTC also says that all available research data suggests that most day traders are not profitable. Um, any analysis given gives no guarantee in the stock market. There are no guarantees in the stock market. There are always risks. As all trading comes with risk, there is no guarantee of success in the stock market. And again, as I mentioned earlier, all these materials, audiovisual, my voice, anything you see here is the property and rights of Pinnacle Institute. Any reproduction or redisplaying in Facebook, Twitter, YouTube, Instagram, and all the other social media is not allowed and strictly prohibited. Um, if you contact us in other methods, we will respond to you in kind as well. Good afternoon. All right, so let's get into it now. We have got some of the administration out of the way. So what influences are there to contribute in price? Now, I do run the investing in stock class with Pinnacle Method. So generally, I would ask a wide open question of the group here. I'm not going to do that. We're going to get right into it, considering time. Many of you out there know that earnings reports are an indicator that can, or an influencer that can move price, as well as news, all kinds of news that you can have: positive news, negative news, news that's by the government, news that's by the company, um, news that could be on a related market to a company, things like that. All things are influencing the price movement. We have revenue statements or balance sheets for corporations, along with that earnings report. There's always different statistics and different publications of how the company is doing relative to many different aspects of the business. There's also Fed meetings, FOMC meetings, announcements that they have, buyback programs for bonds, all those kinds of things that the Fed has tend to be highly impactful type news and very much publicized and anticipated. And out of those can come interest rate changes, which can also contribute to price movement of this or that over time. There's economic reports, non-farm payroll, different inventories and different uh, commodities, consumer price index, and lots of other reports that you see. Many sources for those that are done almost every day. Different levels of impact in all of that. There's global political news, right? War, terrorism, peace. People don't usually put that in there, but peace is actually a good thing that we can look forward to. Um, but a lot of that geopolitical stuff that occurs, whether it be true or false or just noise or saber rattling, that all impacts and has some influence to price in the market. Financial opinions and publications, of course. Here's the all of the internet sites, the big companies, the market makers, the radio and TV folks. All of those are putting out things that are to influence or at least get your reaction, whether it be get clicks on their website or get you to buy or sell various securities. And also from there, they have recommendations that are influencers because sometimes those recommendations do cause the retail world to adjust or look, at least take notice and determine if they're going to do something on those things. And there's many other news factors, right? There's things that people say in TV and all that that input that come into is that going to input price. Some of those things can be, inventories on oil. It could be some of the retail numbers that come in. All of those kinds of things will also have a layer of news on top of that, which might suggest to you what's supposed to happen because those news events come. And of course, there's public interest or the buzz. This stock is very highly regarded, or this is an up and comer, or this one's not doing well. All of that stuff that comes in from word of mouth or just ad hoc in emails and different publications that come and get absorbed by you or at least seen by you or not seen by you is just as important. All right. So in Pinnacle Methods, we have one of our laws. We just have guidelines and laws that kind of put us on our path. And this is just one of them from one of our classes, which kind of resurfaces in many of our classes because it's an important one. But all these influencers that I just mentioned that can influence price, they develop thoughts and perceptions of individual retail traders, of institutions between each other, of the government, of the Fed. They all go into creating thoughts and perceptions that an individual again or an institution can have out of that. And from those thoughts and perceptions, there are actions to buy or sell a security, many securities. Um, okay. But all of those influences, and this is a very important theme here, all of those influences, by the time they hit the action of buy or sell, are all in the market. The action of buy and sell has already happened. Many of the things on the left have been acted on by the institutions or by retail by the time that you see the information. Okay, very important to understand that. So everything that is in the price of something is there because of this stuff before you get the chance to act on it. Okay. So with all these influences on price, how do you best determine when to get in out of position? If I've just told you that it's already moved, uh, how do you use these things to get out of position and most importantly from a trader and investor perspective, consistently and with confidence. Now the consistent word is going to keep coming up in this presentation because it's very important. But with confidence allows you to get off the pot and do something or get out of something because you think it's the right thing to do. That's just as important as finding what to get into is when to get out of it. But being confident about what you do allows you to actually act. So with that in mind, um, I can't possibly keep completely apprised of every little bit of information that's out there. We just had a long list of stuff, but it's nearly impossible to keep apprised of every piece of information for every market that you might want to be in or are in, and potentially the ones that you care about, because there is so much information. Additionally to that, you couldn't possibly have the time to verify all the information. So if you see something and you start acting on it, you've kind of done yourself a disservice. You haven't verified that that information even makes sense for you or for the particular thing you're looking at. And even if you did have the time for that, your verification might not be correct. right? How would you know it's correct? So the point is there's a lot of analysis that can be done on all this information that's coming in from all the different sources, and they're all trying to influence your price, whether through active intention or just the fact that those pieces of information can influence the bottom line for a commodity or a company, et cetera, et cetera, et cetera. So you probably you'd likely be unable to act consistently, as each decision would have numerous and varied drivers. So if you're buying one company, there might be, or considering one company, there might be different things for that company that would be for another company. Or if you're going to buy an index, there's things with a specific index is different than other indexes. So each of those decisions, because the influences are so varied and so diverse, make it very difficult to act consistently when making a choice for investing or for trading. So with all of this that we're talking about, a little diversion here, but does it make sense to be fearful with what you've seen here? I have to get used to the delay on YouTube. I'm sorry about that. It's if I say something before it shows up. Um, does it make sense to be fearful? Well, sure it does. It makes sense to be fearful or concerned or anticipatory, right? Because at the Pinnacle Institute, we understand that anyone without a plan should be very fearful because all those pieces of information that you're having to look at, take in, evaluate, cast aside is a tremendous amount of information. And in the financial world, of course, you have the deceivers as well as the people that are just telling it like it is or telling it like they think it is that they could be wrong too. So without all of that, how can you have a sense that you're less fearful in the financial environment? The important part to take into account here is you want to play your game. If you take certain information or certain sources verbatim and you just do because of what they say, you're playing their game. They could be again deceptive with you, but not criminally deceptive, but they're trying to influence you one way or another. And by doing that, you're playing their game. Now that game may work fine, all right? It may work for a period of time, but it likely doesn't work for all of the securities that you might be interested in because the sources are going to be different based on what you're looking at, right? And the players are different. But we want to move to where we're playing your game and not their game. And when we talk about these influencers, I want you to think a little bit, if you could, about what really happens when all of this information gets applied and gets known to the markets and the markets are open and they're trading and all that. And oftentimes, there's no movement at all. I'm sure people that have been experienced out there have seen earnings come in and earnings go, and nothing happens. Or some big news comes out about a specific company and nothing happens. Or the Fed comes out with an interest change or whatever, and nothing or very little happens. These kinds of behaviors happen all the time where something that could be seen as a very important influencer more often than not has no impact on the price or seemingly no impact on the price. In some cases, it's baked in, meaning those institutions have already applied what they know to the markets that they're trading and investing in, and they've moved on by the time that you get the ability to do anything. There are several reports that these institutions pay good amount of money to get just a few seconds or minutes advance notice over the public. And I think you've probably seen many times where it appears that the executive branch of the United States government, at least, has the information before the information gets published as well. So they'll say things and do things that make it pretty obvious that a lot of the inside people have already baked in their their changes due to that information. What it also does, and for the people that aren't familiar with supply and demand or the Pinnacle methods, um, most of the time, a big influencer just moves, or a news event or whatever it is, just moves price to where it was headed anyway. If it was going to go up to a certain level, it was probably going to get there anyway, and that news event or that influencer just kind of sped it on its way a little bit, whether it be up or down. Another thing that happens when an influencer influences price is it doesn't stick. Often you'll see prices will quickly retrace back to where the event occurred. I mean, this is very, very notable. Um, uh, Almost every day, this kind of thing happens, and especially the ones that are very anticipated. You'll see all the anxiety will move price because the people trying to guess price here or there are are jumping in with the expectation it's going to go one way, and then when it doesn't go their way or it does go their way, they either get out or they stop out, and it just vibrates right back to where the thing started. It's a very important thing to understand, and it's very disappointing for people when they see something that it should do one thing and it just doesn't do it or hold it. And there's some frustration in that, especially for your breakout traders and things like that. And many of us out there have seen that there's something extremely logical, and you see this very, very often in earnings, where, and I think we saw it in the last few weeks, we saw earnings really come in very good for a company, and that company in the market went down right after that. I mean, immediately after that, at the open or near near the close or in the futures environment overnight. And there's always someone that's going to be disappointed with the numbers, as it turns out, and they may move the market at at a period of time or for a good distance that just didn't seem logical based on the information. So more or beating earnings isn't necessarily going to vault that stock price to an all-time high, is what I'm trying to say here. And again, that could be very frustrating because the logic just does not match what happened to the market. Okay. This is probably the most frustrating thing for traders that try to trade on the news because they are kind of slapped down that, hey, that was good analysis and there's no logic to what happened there. All right. The other one is there's a confirmation bias trap where someone will be looking at a few pieces of information and they will just go long something or buy something and it goes their way and they get positive confirmations all around that say that's what should have happened, which can be a trap because they will expect that to happen the next time. And oftentimes it does not happen the next time. The next time they're disappointed, but they get a little angry, a little anxious, a little apprehensive, a little untrusting of the markets. That makes sense? Okay. So um, being right for there's an old saying that if someone becomes a futures trader and they're successful in their first month, it's absolutely a curse because they think they did everything correctly, right? But then they find out soon enough that that wasn't all those influencers they were getting that were making those decisions. They weren't the right ones, and it goes upside down on them and it doesn't work. So oftentimes struggling at the front end is a better thing to run into than, call it luck and starting out, with a positive. So that confirmation bias is a very, very powerful thing because we all like to be right and we like the reasons that we're right to be repeatable, but it so often happens that it isn't the case. Now, am I trying to disappoint everyone with this slide? No. Um, so what do we have to do to prepare for these influence events? The major ones or the minor ones? The ones specific to a company or the ones that are specific to an index or the market overall? Well, we want to be aware. We want to be that aware that these events can occur, whether they're planned or not. And they do occur, whether they're planned or not. They're a reality in the market. The market doesn't always go straight up or straight down or sideways. It doesn't always do anything. But the awareness that these events do influence price of various things from time to time is really the thing you need to capture. That they occur is more important how or what they're going to do when they occur. As we look at these things, we start to get more familiar with the influencers that we care about and watching them and things like that. Oftentimes, we want to stay on the sidelines. We want to watch what happens. We don't want to jump. We don't want to buy something with the anticipation that it's going to move this way or that way. And just see what happens with the newsmakers or the markets relative to how the price moves based on that. So learning how things work is a very important aspect of trading. Not necessarily jumping in and putting money out all the time, but just learning how the price moves for a particular event. All events are not the same, of course, but there's a certain categories of events that could occur: wide sweeping events, big news events, little news events like earnings, specific companies, all that kind of stuff, and learn how the price moves. Be comfortable with that and get out of the anticipation game is a better way to prepare. Now, moving into what we do at Pinnacle Methods is plan to catch a move. Instead of jumping in and getting a move because of anticipatory analysis, go long, go short, all that kind of attitude, catching a move, letting the price come to us. And this is the patience part of this presentation. Waiting for something to catch a move that was caused by regular price movement or some kind of an influencer is the attitude to have. So not jumping in, but waiting for it, whether it be a sale price or a high price or a place where you expect the price to go down. Either one, waiting for that to come to you adds odds to your trade or your investment, as well as puts you in a position where you're not forcing something, you're letting that thing come to you and you're forcing its price to move when you get into it one way or the other. So we want to define our actions. To catch a move, we want to define our actions and wait for that price to come to us. And that is the heart again of the Pinnacle Institute methods and methodology that we'll be talking about for the next few minutes. All right, any questions at this point? I think I'm seeing the chat. Okay. So how do you best determine when to get into or out of a position? Well, that's what, again, at Pinnacle Methods, we use supply and demand to help provide the confidence and the skill set to trade and invest in any market and under any market conditions, which is a very broad statement. But what what we do at the Pinnacle Methods is all of that stuff we talked about with influencers, we take that as a note, but that's not why we would get into or out of something. It's always based on waiting for our areas of interest to get triggered. All right, let's get into a little bit more of it. One thing about the Pinnacle methods that's very, very important to understand is if the security is chartable, meaning you can get candlestick patterns or any kind of chart that you like to or prefer, it allows us to do these decisions with that security using the same methodology. So whether it be McDonald's Corporation or gold or Apple or Amazon or state your stock or state your future, all the NQ, the S&P 500, the indexes, as well as the currencies and the commodities, oil, gold, oil, natural gas, corn, all of those, the same methodologies for all of those. So learning the Pinnacle methodologies kind of opens up a world and hopefully can make you more comfortable playing in that world because all of the other just the complexities of that are kind of eliminated because you're using and applying a single methodology to entries and exits within those markets. It also allows you to be very independent from news sources and really looking at that as being the sexy part of trading because they are very inconsistent. The results are inconsistent. What's making them excited communicate that today is inconsistent. Um, the uh, the value you get out of there, again, not to overuse the word inconsistent, but that is exactly what it is. Um, Even though there's tons, think about why there's so many sources of information now. If you go to any major website, there's Fidelity or any of the others. Um, there's tons of information there, and that's because of computers. It's very cheap now to present tons of information. Didn't used to be the case, 30 years ago. It would be very much more difficult to present that because websites weren't as prevalent and all that. But now they are. And to store and display this information is a very simple thing. Therefore, it just explodes and there's more and more and more of it all the time without necessarily being of any value. But the fact that it's there does give some people apprehension because they think that someone else is going to always know that piece and it's going to be an advantage to them. Little quick story, little sidebar. When I started with supply and demand several years ago, that was one of the big aspects that I really latched onto. Was I knew, having just I did early retirement and having left that, I knew that I was not a financial guru compared to someone that had been in the financial markets for 30, 40 years. I felt that I was never going to compete, if you will, from an I almost said intellectual. I didn't mean that. But from information flow and habits and all that, I couldn't compete with someone like that. Just if I was just going to buy Apple, there would always be someone that would know more about Apple, right? They would know more about that information. And I realized very quickly that with supply and demand, it kind of relieved me of all of those little details that people think they need to know to make money in the market and to trade and invest in the market. And I found that it stripped away the need for all of that and brought it down to a pretty straightforward process to determine when to buy on sale and when to sell something because it's reaching the end of its move, if you will. And also stopping out and taking targets was a new concept to me. So those things both gave me the confidence that I could come in and I could basically trade anything. And within a short period of time, I was trading nearly not everything, but I was trading a variety of different types of things, which couldn't have happened if I was still focusing on all the news and the little, the buzz out there and to make decisions. Okay. Like I said, you, with using these methods, they've been proven to provide value in the stock market, in options trading, extremely valuable in options trading, as you'll find and you'll hear in the session if you choose to go to that free session that's tomorrow. The futures environment, the cryptos, the currencies. The cryptos are one that, 6, 7 years ago, you didn't have a lot of charts and supply and demand volume, but now you do. So you can actually trade cryptos using supply and demand techniques, currencies, and anything else that's chartable, including the commodities of, like I said, wheat would be one that made some big moves this year. Um, Oil and corn and gas and uh, silver, um, platinum, all of those are tradable using just this technique. You don't need to know everything about everything necessarily to trade successfully in all of those environments with those security types. Okay. It also enables, because you can go broadly and the techniques work across all the environments, it enables a consistent process. And if you have a process that you're just trying to apply in the different security groups, it becomes much easier. If you have to learn everything about a new security group in order to feel confident to trade it, that's a limiting thing. That's going to make you not probably reach into there. There's many people that are very terrified of futures, okay? And they can't be convinced that futures is for them. Same thing with cryptos and options. Very uh, tentative to go into those areas. But through trading stocks or ETFs with Pinnacle Methods, people have become very much more comfortable stepping into those worlds, which might actually be a great fit for them, but they weren't confident enough to do so. All right. And again, the lack of a process, the people that are just shooting at the stars trying to guess this or that, those are the people that fail. Those very rarely hold on to their money, and they end up giving it back to the market because they think those techniques are sustainable. But I have to say, they're not. You need to find a consistent process that allows you to accept your loss with a reasonable loss and take your wins with a reasonable win. If you're always just looking for the home run, um, there's going to be dry spells, those that know, or slumps that can take you out of the game. So, with this in mind, um, for the next few minutes, we're just going to go look at the charts, and I'm going to just show some very high level ideas on how this works. Now, I'm not going to do it. I'm going to do a disservice to day trading because I'm not going to talk about day trading today. However, these techniques work great for day trading, and please understand that if that's your passion, the session tomorrow and in the other days that we have them will be valuable for you as well. And they get into the more details in those sessions as well. All right, so let's go to the charts real quick. If you have anything that would interest you for me to show and chart out here, I'd be happy to do it. I have a list that I was going to go through here. Not to be boring, but I was going to start with Apple. And since we got on the call, it has gone through. So the market's continuing to drop today. And so we would be looking for our next area, which is already identified here, is, and I won't get into why it's chosen, but the attitude of what we do here, and I'm going to go to the weekly real quick here, is when looking at markets, we look for the areas where we can identify where the footprints of the institutions are. And in a chart, we found that there's a very consistent methodology for finding out where those likely footprints of the institutions are. And what that is that's potentially where price is going to turn based on um, historical analysis and experience. Okay, now this one here is showing that it's likely to turn. That doesn't mean it's guaranteed, right? Nothing's guaranteed. But the more likely and the more probable um, location that things are going to turn is on the chart. And notice what I have here is I have a range. Okay, so this would mean if this doesn't work out, if this entry doesn't happen, we would know if it broke through here and we would stop out. We would accept that loss to not take more downside and be on our way hopefully to the upside, right? But very important here, we're not watching to see what the Apple news is. We're not watching to see what the overall news is in the world. We have an area where Apple itself has a probability of getting a bounce. All right. It works for supply as well. It works for the high side as well. So if we are up here and we say, there's an area right here, I think that it's going to struggle to get past. I could say I'm going to short this thing here, and that would have been a really good short right there, of course. Um, so it works both ends of the equation. It works for a demand. Demand means where the price is going to go up, and supply means where the price might go down or people are selling that thing. Notice we're not looking in the middle here for jumping on board or anything. We could get a pullback to supply, for example, and get on, but we're generally not looking for um, just riding something or jumping on right here because it's going down. That's not the attitude. Even though we think it has to come here to get a nice response to the upside, we're generally looking at this as it's in an area where it's not a likely trade right now, but where is the likely trade, up the high side or downside? And that's what we look for because we wait for it to come to us. We are patient to let it come to us. So this one is currently not in as favorable position as it will be down here. Not that it can't turn here. It's just saying it's not as in a favorable position as it will be when it gets to here. So what you can do in this case is you can be looking at many stocks. Nope, notice on the right side here, I have all the Dow. You can have these zones marked. They're called zones, by the way, for many stocks for catching this move down. And you can take the ones that are coming into what we call the demand zone or the willing to buy area and move up. Also, we use these areas when we're talking about options to sell puts, to get in spread positions, and all of that. And instead of saying, I just want a $10 range, we're able to look at our supply and demand zone and come up with the strikes we're going to pick for options based on the supply and demand zone that's in front of us, that's available to us. Okay. Um, okay. So that's the attitude that we have, and you can see that we're looking at Apple, and I can pick anything here. Let me pick McDonald's. I mentioned McDonald's earlier. McDonald's is very interesting in that this is the long-term demand zone that was identified. It's a daily zone, and this would be the area where we'd be willing to buy McDonald's because of the analysis. And again, the other analysis we have is it looks like there's a large profit zone should this work and turn price, which it did just a few weeks ago, right? But if it turns price here, we've also got a profit zone marked, which is also something people generally don't think about when they're normal investing. We use supply zones with opposing demand, or profit zones with opposing supply zones as our indicator. For example, and I'm not doing full analysis here, but this might be an area we would say, okay, this area has not been breached yet, couldn't get to here. This might be in conventional wisdom speak, a resistance area for price to go above. So we would say that's the outside of our profit zone. Getting in here, we would expect it would move a certain percentage towards that and potentially get out when it got close to this, thinking that, oh, it might come back down like it did the first time it hit it. Okay, so that's just a quick little example. But the idea is we're waiting for our entry and we have an identified target. Okay, all very easy to see on the chart right now. And you'll see as you get more experience, it's very easy to see on lots of charts without really thinking too hard about it. So McDonald's looks like it's a little stronger than Apple was, right? Apple took a big hit down today, and McDonald's is showing a little strength, which makes this even more probable to work. All right, so let's move to the next one. I think I had Cisco as one I wanted to look at. All right, Cisco, here as a demand zone marked. You can see it's right here. The way we identify these, will be shown tomorrow. But the idea is instead of all of this and feeling uncomfortable when Cisco was dropping all this time and eventually did a big drop a couple of days ago, we would be sitting here because there wasn't a lot of good stuff in here. We would be sitting here waiting for it. Now, isn't that comfortable when you're waiting for something when the market's going down to buy it, when most of the other people in the market are are scared and not able to act at all right? This is the thing that we find a lot with the Pinnacle methods is it's not counter, but it's you're waiting for sale prices on things, especially when the market comes down, and you're actually more excited about it coming down than the other people are that are very anxious about, they've got investments in things. Because most likely, if we own Cisco, we would have stopped out of it and not accepted all this downside, but then started anticipating getting back into Cisco when the price was right. And not the level of price, but when it came into a zone that shows institutional footprints to push that price back up. Okay. Okay. Questions on the link, I think, are getting answered by them, right? All right. So the other one I wanted to just look at today is the S&P 500. We'll probably go over to the triple Qs as well. Now this one I wanted to show evidence of. This is a demand zone that was identified quite a long time ago, a very long time ago. All right. And, not just when this all came down. And you can see as the price came down here, it got right to it, and it did a very nice move up in the SPY, which is the S&P 500 stock, and a very nice move up. So there's an example of what happens often with supply and demand is we get a nice sale price, and whatever happened, it did turn around in this case. Nothing's perfect, but things could have happened there in your behavior to capture these gains. And this was a supply zone right here that was identified in what we call our forum session the previous day, and it was the source of this move down. So there was a reason in supply and demand that we could see there was a possible move down right at that point. Now it wasn't saying it would be to here or anything like that, but this was the new opposing fresh demand zone that was a likely target. So there are people in that have been working the Pinnacle methods the last few days that got this trade today, and they probably targeted out right about above here a little bit. So they've got a nice trade, whether it be in the futures or in the stock itself. All right, just an example of what can happen when a demand zone works, and uh, you get the confidence. And when you see these kinds of things, that um, all of what was being said in the market didn't matter. I was focused on my demand zone for my entry, and that demand zone caused the pressure in the right place. Without all the news that was going on was negative to drive it here, but that's where the opportunity was. When everyone was being negative, that's where the opportunity was. So I would have loved to show you this continue up, but it didn't happen today. It did happen with Apple too, and Apple turned around with everything else today. Now, right now, I would go back and look at the market and say, okay, what's in the news? What possibly could have moved the market? And then after the fact, you can say, oh yeah, that there's some logic to that, but it didn't necessarily have to be the reason that you got in or out of something, is whatever that news was. Oftentimes, news, especially on Fridays, will be counter and really won't affect things. In the case of today, there probably was some news that moved things or or affected things. Let's go to another few. Anybody have a stock that they're interested in? I can just go to it and we'll do some quick analysis on it. Just want to show you that it can be very quick to do. Nobody? All right, I'll just randomly pick one then. How about Microsoft? I bet you that's going down with Apple going down. Well, here we are in Microsoft. We have a nice gap above this daily zone. Strong long move here. It's an interesting area, small risk to get into this one. And it's coming into that area right now with the other markets. As the other markets and everyone else is more and more negative on Microsoft, your supply and demand trader in the Pinnacle using Pinnacle methods is a little bit anxious about maybe there being a great opportunity here in Microsoft. If not here, then the better one down below. So right here, they could be selling puts and just trying to make money in the short term, using this as protection of their strike. Let's say a 140 or 243 strike. Maybe they sell a put here with some good um, volatility, good price for their put, and all they got to do is buy a week's worth of time and cash out that put when it gets close to expiration. If it doesn't come below this zone, they've made money. This is an example of how supply and demand can really help you pick your strikes for selling and buying, selling puts, buying calls, selling calls, because you've got kind of an area that you've defined as it's going to be more difficult to get through. Not just wild field picking strikes without any thought behind it, but by having an anchor of the demand zones in this case to sell your put in or below that gives you the confidence to actually pull the trigger a lot. And as this market turns around, it becomes more and more evident, especially for people that like to sell puts or add to positions when they can use the demand zones to do that and not just a whim or two. Okay. All right, we'll look at BABA. Thank you. All right, BABA on the daily. I'm going to go to the weekly real quick because I do not trade BABA, so I need to get myself familiar with it a little bit. Weekly. Okay, there was a weekly area here that got used. And oh, we just got into it again. Isn't that interesting? See how that works? I went over here, I found something, And sure enough, it did turn price the other day, and now it's coming back to there. Like many of the tech stuff, it's behaving the same way. So the next one I want to look for is probably down here a little bit. If I want to get into Baba, I'll be looking here. I'm going to take all of this. There is a gap in there. It's a 3-day zone. It's pretty deep. It's $10. I mean, it's pretty thick. $10 of risk. Let's get rid of this because it's really moved through here. But I'm just going to change it to, I'm going to leave the zone there because we want to see it, because this one is still holding price. Even though it kind of wicked through the actual zone that's marked, it's still holding price. So if this turns, I want to be aware that there's something here still potentially holding it if it comes back to a demand zone as it moves out of here. Absent that though, we could sell puts, we could buy calls, we could do many things here using this zone as our base, where we will stop out if it breaks this zone. But until then, we have options for entering Bob along here that might not have been there if I wasn't confident with this a demand zone below. I hope that makes sense. There's certain things that you wouldn't be confident enough, you'd feel very speculative if you didn't have some basis for doing it. Here is another one. This is on the daily now. Baba has a daily zone that moved up very nicely, like all the markets did. Um, and then it's come back, and notice how it used it again, and it's moving up again. So this was $20, $30 move here. This is not insignificant, right? So this is an area where we would consider marking this. After this move up, we would mark this, and then we would be looking for this retracement back to it to get our sale price with more potential for the upside. Okay, good one. Bob is a good choice for discussion here. This also shows how a supply zone worked right here. As this came down, it formed a supply zone where now we would be watching this for shorting opportunities or targeting opportunities for longs. And you can see right here how that worked. Now, do you think the news and all those other influences were key to getting this entry? No. Without supply and demand, this entry would never have been possible. Does everybody see that? Except for guessing. All right, let's look at gold real quick, GLD. Okay, and I guess I did use this chart before. Clean it up. I'm on the daily. I'll just stay on the daily. Um, Gold is a commodity. It ranges a lot like this. It goes up here. Notice how it went up and then it ranged for a while. And then it finally broke down through all of this, which would have been profit zone for a shorting side. It broke through all of this. And the important thing I want to show on gold is the trade that I was actually in was right here. There was a supply zone that was a nice entry for a long-term short. Again, all the anticipation was that gold is a protective commodity, and the war is going on and the oil prices are moving up, and it's all the bad news and everything. But look what really happened to gold with all that bad news that there was just in the last few weeks. It found a supply zone and reversed. Okay. This is why it happened. Not because people got gold out of favor or the dollar was moving up. It happened because of the supply zone in gold. All right. Tremendous opportunity. Uh, 15, 17, $18 move, and very likely because of the analysis we were able to do in supply and demand. Right. So I got that trade. I got out already, but that trade was because I was using supply and demand to get into a gold short. Okay. Thank you for gold. And now on the long side, we are having an area right now that it's worked at for several days that was the supply zone, which was the source of all of this move. I'm sorry, demand zone that was the source of all of this move. So right here you can see, yes, it did. It held price up and it is now moving up. Do we have a lot of profit zone potential in this? Yes, we do. It can come all the way back up to here or at a couple intervals right here maybe. This is a less ambitious target right here, but those areas of interest are very well defined for gold in the daily. Now I'm just showing the daily, like I said, but all of this works on the 15-minute, 5-minute, 30-minute, you know, much lower time frames, um, which you'll again see on Saturday when you come to that session. All right, so there's gold, free analysis for gold, and go to Tesla. You tried to fool me by putting the whole word Tesla in there, didn't you? All right. Obviously, we know Mr. Musk. We pull up Tesla almost every day, right? Just to see what's going on. Now here, Tesla on the weekly, you can see the same kind of thing, just like gold. It moved up big time and then had a few moves down, retracements back, and then a big move down now. When we look at the zones that might have been created on the way up, I don't want to look on the weekly. I want to look on the weekly for major levels. Like, okay, the major level would be right here. Tesla comes here with this big move up and this weekly zone. I'm going to be very interested in giving it a look. All right. And some people would say, I can't believe it's going to be at 500. Well, a lot of people said when it was 1200, I can't believe it's going to be at 700, right? So these things happen. Markets move up and down on their path. And these kinds of entries are, no pun intended, golden often because we've been waiting for them in the weeds. We've been patiently saying that's an opportunity if it gets there. My alarms went off on my system and says Tesla's on sale now and it's time to act. Okay, so on Tesla here, we do have again an area here. Now these are pivots right here, right here, right here. This one is a source of another gap, but the actual zone for this one is down here. All right. This one is a lesser area where you might put less position on, but this one down here is the better area for getting on the long and more probable area. Not that it's low probability. This one might turn here. It might turn right here, right? But when we're looking and waiting and getting good sale prices to get more potential for the upside, we make note of those. And in the way that I do it is usually if it's a better zone, I'll give it a little fatter line just to give me some indication. I'll give that a look see, make sure you don't miss this one if it happens. And the one above it, I might not be enthusiastic about. But what happened to Tesla that made this thing move down so dramatically? If you're watching Tesla news, did anything awful happen to Tesla that made this move down happen since April 1st? No, they're still making cars, right? So there's other influencers that move this thing down. And those influencers might be general market stuff, you know, inflation, things like that, or interest rates. If people, I don't know how many people really take a loan out for Tesla, but um, someone knows that, right? But anyway, it moved through here pretty far, providing, in my mind, opportunity for the upside when things get better, right? And for long-term investors, getting Tesla at a 50% discount is very attractive, but where do I take it? Where do I take my discount? And that's where supply and demand comes in. Where do I have higher probability to take that discount and accept it and get in? And that's what we're talking about here. Okay. If we want to buy at you're talking about gold for that. You're talking about Tesla for that. That's Tesla. Right? If you want to buy on the 44026, okay. Should we have to add the spread? Oh, if you want to get on a spread here for this, well, it depends on what you're doing. If you're doing options, you could get it on the proximal. If you're just getting long options, if you want to sell a put to anticipate buying or purchasing the stock here, you could do that. You could also break this up. It doesn't have to be that big. When we're looking at supply and demand, there's always different levels that we can look at. Okay, there's the major levels, of course, and those are important. But there's also, if I can get back far enough, hopefully I can. There's also the ability to split up a zone and say, in this case, maybe I only really want to take the bottom portion for my entry. Okay. Maybe get a small position at the proximal and maybe get the full position when I hit, an area within that zone. So there's always ways to drill in, we call it drilling into the zone to reduce your risk for that particular trade, and to, in this case, it would be a little better price to take this here. Okay, this is marked for the daily and the weekly, and now I've marked it for the 60. All right, which is a portion of that whole. Right, those kinds of things and methodologies we do all the time, and we discuss them at length. All right. All right. So I hope that helps. That's the gist of it on a very high level of what the Pinnacle methods are. And I hope that you know take the free seminar tomorrow. It's very convenient. It's not very long at all. And just get an idea is where we're where we're at, and what the different way of thinking and what that can do to free up your mind to just trade, and allow all of the other distractions kind of go by the wayside if possible. Um, Something I didn't mention today was all of the other indicators. And you notice on my charts, you didn't see any Bollinger Bands, you didn't see any moving averages, you didn't see any volume, you didn't see any of that stuff. That also can be very appealing for many, in that you can trade and you can get in good positions to make money without all of those indicators and oscillators and noise on your charts, which when you're moving between, call it 150 stocks you're watching, it's very helpful to just have simple looks at those things that are buy areas and sell areas, and that's it. All the rest of it doesn't matter. Um, we do use odds enhancers that I won't get into here because you got to go to the session. But we get into odds enhancers that other markets that help out the market that you're working on and things like that. So instead of going to, all the information on the internet about that particular thing and what might impact it, we look at what other securities coming into a supplier demand zone might assist that trade in having more probability to get the move that you're looking for, which is very powerful stuff. All right. A piece that we have every day, every weekday in Pinnacle Methods is we have what's called a daily forum session. Now, this is done by, what do you call it? Our architects, or our our senior folks at Pinnacle Methods, and each day they have done all their hours of research and seeing how things are going and where the opportunities might be for the next day. And in 45 minutes, they present, um, from a swing trading point of view, or a long-term trading point of view, what's going on in the market. And in this case, if there's important news that's happened overnight, they'll talk about it briefly. If there's things getting near a zone that are important, they'll talk about that. They will really focus on the indexes, a lot of the dollar, the major markets and where they at. And what this does is it puts people in a sense of, we're very consistent with picking our trades. It talks a lot about those odds enhancers I talked about, where certain trades you're going to want to maybe go full position when you have the odds enhancer, and maybe a 20% position if you don't. Those kinds of things. So those are always brought up every day, and it allows people to learn it a little faster by seeing the same thing every day, as well as get more confidence that, hey, that the zones are working. These things are really, moving price, and and allowing me to pick my targets and protect my trades and protect my investments. That's what you find when you go to this every day. Is you see through the consistency, you see the consistent um, value of it. Okay. And oh, and an important part of that is every week there's kind of a review. Or at the beginning of the week, there's kind of a prediction of what might happen. It's not a real prediction, like, not like palm reading, but based on the market conditions, these are the things that are likely to happen this week. And then that's wrapped up at the end of the week. It's like, here's what we said was going to happen. Here's what happened, in a realistic, honest view of how that worked. Um, so so that'll be Monday. We'll see kind of review next week and what might be happening in next week. In all of our sessions, which there are many, there's investing sessions and all that, we're always talking about these same products all the time. So whatever you're interested in, whether it be options or futures or investing stocks or currencies, very consistent in what's talked about to aid our members in their growth and their comfort and their consistency and understanding and all that kind of stuff. All right. So again, tomorrow there is 2 sessions. If you're familiar with supply and demand and been doing it a while, Sam Seiden has a session, um, and Steve Moses has a session for those that are just breaking in. Okay, both are valuable, um, and you can see that there's follow-ups to both of them. There's alternatives. So please, take a picture. The recording of this session is available on YouTube. There are also previous sessions available on YouTube if you want to find them. They're under the Pinnacle Institute. All right. So if there's any other questions, I'll get just a minute for another question if you have one. Thank you for attending, and you guys have a great weekend and a good afternoon.